And Americans cut their spending in March for the second straight month, a sign consumers are feeling the pinch in their wallet amid rising rates. And while the federal funds rate rapidly grew over the past year, so has credit card interest rates in the U.S. rising to roughly 20% in the first quarter of 2023. Here with some tips for credit card owners in the face of elevated rates is Yahoo Finance's Kerry Hannon. Kerry.
Yes, I mean, absolutely. We're at all-time highs for credit card rates, over 20% now, up from 16% a year ago. So consumers are really feeling the bite because the majority of cardholders carry debt month to month for at least a year. So this really adds up, and you need to take control of that because it's directly impacted by how the Federal Reserve, when they hike up their rates, it hits your credit card probably a month to 45 days after the rate hike goes in. Then it shows up in your credit card and the rate that you're charged by your issuer. They don't have to give you a special notice that they're going to bump that rate up because it's tied to the index. Your credit card's tied to the prime rate, which is about 3 percentage points above the Federal Reserve rate. And then they build in their profit margin of maybe 12%. So it's really important for consumers to understand what this impact has. If you carry a 5% balance and you're only paying your minimum balance, it's going to take you years, maybe 15 years to pay off that debt. So it's really important to take action now.
So what are some of the tips for those that are facing credit card debt amid these higher interest rates?
Yeah, the fastest way to do it is if you can qualify for a zero balance transfer credit card offer, and they're out there, you can transfer your balance, your high balance, over to a zero interest card, which is usually around 21 months. Now, you'll pay a small fee for that, 3 to 5% of your balance, but it is well worth it to give you that breathing room. You might also look to a personal consumer loan. Now, these aren't as easy to get as they once were, of course, but if you have an excellent credit rating of, say, 750 or above, you might be able to get a personal loan for 2 to 5 year duration of 7 to 8%. That's a big drop down, and again, helps you get control of that debt and start paying it down. The second thing I recommend people do is to automate. If you can automate your payments directly each month from your checking account, that helps you keep away from getting late, but getting behind and having extra fees, and also, paying more than the minimum. By all means, pay as much as you can towards that balance. The third thing you can do is actually try to negotiate with your credit card issuer. If you've been paying on time and you have a good credit score, it's possible they may lower it for you. Or if you're really in a pinch, there are nonprofit debt counselors, and the Justice Department, if you go to their website, they have a list of ones that they've vetted that can help you negotiate directly with the issuer to lower that rate for you. You'll pay a fee for that as well, but it's really important that you take action. And if you have multiple cards, my recommendation is go to the card with the highest percentage rate and put as much towards that one as you can to get started.
Some solid suggestions there. Thank you, Yahoo Finance's Kerry Hannon.